Good day. Today I want us to focus on the ordinary shares, but let's also look at the preference shares. So in a company, we deal with these two shares. So we have an ordinary shares. So in these types of shares, the shareholders have the full voting rights for the ordinary. They have the voting rights. And then for the preference, they don't have the voting rights. Okay, so these are some of the differences between these two, but there are many other differences. But in grade 12, we are only going to focus on the ordinary shares, not the preference shares. Okay, so what happens is that in a business, this is a business, right? So business A. So if it happens that business A is running low of cash, okay, usually the owners of the business, they have to contribute the capital, right? But most of the time in the companies, instead of contributing the capital or instead of going into the bank, because they can solve the matter of having low cash by contributing the capital or by going to the bank to borrow the loan, right? So now let's consider these two ways. Okay, so most of the time in the companies, they use the shares in order for their cash to increase in the business. So now, how do they do that? They go to JSE. I'm sure you've heard of that, where companies are selling the shares. So they go to JSE and then they sell the shares, right? So when they sell the shares there in JSE, when they sell the shares there, so more people they come to buy the shares, right? So when these people come to buy the shares, so it is going to mean that the cash of the business, it is going to increase, right? So what do we call that? What do we call that? Money that is coming from the people that are buying the shares of the company. We're going to call that money the ordinary share capital. Because I said in grade 12, we're going to deal with the ordinary shares. So that's money that you receive from selling the shares to the public. Or we can say that money that you receive from issuing the shares to the public or to the people in JSE. We call those shares ordinary share capital. So, which is an owner's equity. It's an owner's equity. Meaning that if it's an owner's equity, it means that it decreases on the debit side, then it increases on the credit side. So this means that the ordinary share capital, we expect its balance to be on the credit side because that is where it increases in. So this is how we should look at this.